Alright, so today I have a very special guest with me. He's none other than Dragon Dunn, who some of you may have seen him from other channels. So I'll let Dragon introduce himself, what he does and what is his profession. Welcome, Dragon.
Thank you, Chris, for inviting me to this platform. I'm in the real estate industry for almost 2 decades. I passed my license. That time it's not called RES. That time was called CHA. So I passed in 2002 at the age of 21 years old.
Wow, 21 years old is really young.
So it has been a good journey because being in real estate has been my passion and my ambition when I am 17 years old. So I think that I have lived my life to my expectation. So right now I'm on another phase of life where I'm building my own team as well.
Alright, so thank you, Dragon. So today's video, I think the main question is because I really want to consult on property. I know some of you are equity investors, some of you are property investors. So today we'll get some questions answered, especially towards Dragon's niche. His niche is actually in EC, Executive Condominiums. So there's a little bit of difference between private condominiums versus executive condominiums. And I would like the expert walk us through how is his EC experience in terms of investment property like. So Dragon, can you share more about your EC portfolio?
I don't regard myself as an EC expert. I think there are still many people who are better than me. It's just that I happen to be an EC owner, which I bought in 2015. And currently I'm holding on to 2 EC. One is under my wife's name and one is under my name, okay, as of to date. Typically, I also enjoy selling ECs because EC generally the pricing is much lower than condo new launches as well. But it's only this group of prestigious Singaporeans who are entitled. Depend on their income, depend on their eligibility.
Right, so actually EC, there are a lot of conditions because it is still considered under the HDB public housing. I think some of the requirements are that your income, combined income, cannot be above $16,000. There are also some limits like the MSR still applies to EC compared to private resale condo. So I think a lot of people, they may have this question on whether they want to upgrade after their first property, be it a resale HDB or they are having a HDB BTO like myself. Maybe the question to ask is, who should consider to upgrade to an EC?
Just like I mentioned, it's only this particular group of people who are entitled. So it depends on whether you're a first timer or second timer. Number one, you're holding on to a BTO that you apply and currently you're holding on to it, or probably you sold your BTO back then and probably right now you're holding on to a resale HDB. You're considered as a second timer. You should consider for it if the financing, the budget is within your comfortability. Number two, if you're just like the youngsters in your probably Gen Z in your late 20s, financing wise as well as budget is no issue to you, you should also consider EC as well as part of your wealth building journey.
Yeah, because a lot of people, when we're talking about property, they may really be taken aback because of the huge capital upfront. And EC is in this very awkward zone because there is an income ceiling and yet you would have to fork out a huge capital for a down payment as well. So I think a lot of viewers will have this question. If they are within the combined income range of between like 14 to 16K, but at the same time, the capital down payment is quite a large amount, then should they really go for EC?
Okay, I have to be honest here. These days, if you're going for a project new launches or even the EC new launches, down payment 400K to 500K is a norm, both CPF and cash. So it's often during the balloting days. I'm not trying to mention about anybody. That's the interesting part. I start to see more and more of the Gen Z or probably the younger or so-called brother and sister. They brought their parents with them because these days the Gen Z, they are making good income. The income can be 14 to 16K. Some are actually 17K, but subject to appeal. So typically, HDB depend on case to case. In some of my cases where they appeal based on 17K income, they gotten the approval from the HDB itself.
Correct.
So I have cases like this. It's interesting that the income is good enough to obtain the loan based on MSR. For EC is MSR. For condo is TDSR. It's just about a down payment. So typically you see a lot of uncle, auntie or elder brother, elder sisters who are in their 60s. I'm not surprised. A lot of Singaporeans, they have CPF 1M55, 1M60 or 1M65. And that's where probably they feel that this money probably put in CPF, right? It's not of so much use to them. They just want to give their children, I mean, these are all the blessed Singaporeans. Yeah. They want to give their children a helping hand, privileged group of people. So that's what I see. More and more increasingly, it's a common sin during the balloting days itself.
Maybe I'm asking this question for myself because I'm also getting my BTO really soon. And then after the 5 years, I'm also looking at other property options. Because when I look at the MSR, it is quite limiting at 30% income. So because I was doing this calculation of the monthly mortgage loan, I'm expected to fork out about 4K for $1 million plus property after the down payment. So that means that the income must be at least $12,000 for that household. Would you say that this is a good estimate for someone who is going into EC?
Okay, end day is very simple. I have couples who are earning probably the 14K to 16K a month coming for the EC, but it depends. Probably some group, a category of the buyers, they do not have a high so-called level of money income, gross income, but they have very attractive commission, or probably I won't say commission, is bonus.
Yes.
I have buyers who have around 12 months to 18 months of bonus as well. Despite that, probably the average household income is around 14K to 16K.
Right.
So the bonus will help as well. Also, it depends on the job nature, which trade you are in. Pertaining to your question, because I understand that you bought a BTO, so it comes back to about your comfortability, because I can have 2 or 3 groups of our family who are of the same household income, but because of the difference in lifestyle. Right. It depends on the simplicity of your lifestyle or the luxury of your lifestyle. And they, right, does the finances make sense for you to so-called afford the money installment comfortably? Of course, I also have buyers who are in their late 40s or probably early 40s who bought condo and EC as well. So my advice is that at one point in time, you can do a refi to extend the loan tenure to 75 years old. The purpose is not to continue to pay up to 75 years old. Right? It's to rather that you lower down your monthly installment much lower so that it's comfortable. You have more positive cash flow to finance your kids' enrichment class or your short holiday elsewhere. But if you go further into an amortization calculator, by extending the loan tenure, lowering your money installment, the interest is about the same for the first 2 years. It's just about the principal. Principal is a form of forced saving. So it depends on whether you want to pay a big chunk of your salary, your so-called cash flow to this principal itself, or you just want to lower down with an extended loan tenure. It depends on your strategy as well.
Now, other than investing in real estate build wealth, one of the other ways is to invest in equities as a form of diversification of assets. For example, if you look at the top companies in the US, the S&P 500 index has gained a return of over 70% in the past 5 years. Therefore, if you wish to get started with investing in equities, then take a look at Webull Trading Platform, where you can now invest in US, Hong Kong, even Singapore stock market to maximize your return. In fact, for new to Webull customers, you can get the following welcome rewards when you fulfill the requirements. For basic reward, you will get $200 of cash vouchers. When you deposit at least $2,000, complete 3 US buy trades and maintain till 30th June 2024. For premium reward, you will get $650 of cash vouchers when you deposit at least $10,000, complete 5 US buy trades and maintain till 30th June 2024. But the highest tier is the ultimate reward, where you get $1,050 of cash vouchers when you deposit and subtract at least $100,000 in Moneybull before 31st May 2024, 1559 and maintain until 31st August 2024, 2359. And if you sign up via my exclusive link, you get this exclusive gift, which is 180 days of 3% Moneybull Interest Booster, where you can get up to 8.4% per annum return, and there is a maximum of $10,500 based on 250,000 USD Moneybull subscription. And this is calculated based on the potential 5.4% 7-day USD yield per annum of the USD cash fund in Moneybull as of 25th March 2024, and a 3% USD yield per annum from Moneybull Interest Booster after 180 days generated from the first $250,000 Moneybull subscription. For those asking what Moneybull is, this is a wealth management tool designed for margin account to earn a yield on idle cash while maintaining liquidity. How it works is that the yield is generated by automatically investing your idle cash into underlying cash funds. You can continue trading even when your funds are in Moneybull, because 99% of the market value of your Moneybull position will be added to your buying power for trading purposes. The funds from your Moneybull position will be auto-redeemed when you do not have sufficient cash to settle your trade. Furthermore, there is also a transfer-in deal for US listed stocks. The transfer-in deal is for both new and existing customers who have not done any shares transfers to Webull before. And there are 3 tiers of rewards, starting with tier 1, $400 of cash vouchers when you transfer in $10,000 worth of shares and maintain for 90 days. For tier 2, you will get $1,000 of cash vouchers plus $200 of trading vouchers exclusively when you transfer in $50,000 worth of shares and maintain for 90 days. And at the highest tier 3, you will get $2,000 of cash vouchers plus $500 of trading vouchers exclusively when you transfer in $150,000 worth of shares and maintain for 90 days. Webull will also subsidize the transfer out fee of up to $150 for your first share transfer in if the settled transfer in is of $5,000 or more. Terms and conditions apply. I did a step-by-step guide previously for those who wish to do a share transfer from outside broker to Webull, which you may refer here. With Webull, you can trade US stocks and ETFs from as low as 50 US cents commissions per order, minimally with 0 platform fee during regular and extended hours. Webull also has access to other products on the global markets like Hong Kong, China A shares and Singapore stocks and ETFs with very low trading costs. If you are into options trading, Webull also offers low trading costs from 55 US cents per contract with 0 platform fees. So don't wait anymore, use my exclusive link down below or scan the QR code right here to get your Webull account today. Okay, so I also have this question because for people who they may not have a high monthly salary, but there is another way to increase your loan amount, which is something called show funds. I think this is more towards the mortgage loan side, but maybe Dragon, you can share about this strategy for those people who may not have a high salary, but they are able to show funds. How does that really work?
Okay, show fund is where you need to show a certain amount of money. There's a formula to follow with. It depends on how much you need to show fund to increase your loan. This will often apply in cases where probably the borrower, they want to buy something probably that is 2 million. To secure a property that's 2 million, you need to secure 75% of the loan. Let's say for EC, you need to secure 1.5 million. But however, because of MSR, after factoring the monthly gross income of both couple as well as their bonuses, the maximum loan is around probably 1 to 1.2. The shortfall loan by 300k to 500k, they need to show to the bank that they have this amount of money in the event that they could not pay it up. At least there's a collateral or backup. It's called collateral, but in fact, no, they have a backup elsewhere. But for often, this show fund can be very strong. It can be as high as 1 million. I did a show fund for my client before. That's $1 million.
1 million.
Correct.
A lot.
It's a 22-year-old young lady who bought one unit in Orchard. And because she just started her job, the income is not high. So in fact, show fund means that she has this ready fund. And this ready fund, I won't say from elsewhere. It's actually so-called belong to her, giving the bank more assurance to increase your loan all the way to 75%.
So that's just one of the strategy if you are like in this kind of situation, your monthly salary maybe not high, cannot qualify for higher quantum loan, then maybe the show funds is another method.
There's one more.
There's one more.
Fixed D.
Fixed D.
Correct. So other than show fund, right, we call it pledging. So pledging and unpledged. So one is show fund, one is fixed D. You can put a certain amount of money, but this time because this certain of money called the fixed D, right, is with the bank that you are borrowing the money from. This amount is much lower than the show fund itself. So probably you need to show fund around half a mil. But for fixed D, right, that is that you're putting this amount of fixed D with the bank for the next 4 years until the project TOP, probably just require you around 100 to 150k.
Oh, that's much more better.
Rather than 500k. So there are different strategies that you can work around.
I think that's really interesting because I was also doing calculations for my own property journey, right? Then I realized maybe the monthly income and then the loan quantum don't match. So for those of you who are looking into this kind of, you all have the same questions, right? Then can consider this route lah. But I really want to understand how much can we really make from EC?
So I'm very open. In fact, on various occasions on my YouTube channel and other platforms, I did share openly. I bought my EC in September 2015. So it was around 779k, which I bought a 3-bedroom unit. Today it's worth around 1.5 to 1.55 million.
So that's 100% gain.
Correct. And if you happen to, I don't think you all catch 早报lah. So I just happened to catch a 早报 today. Some of the EC these days, right, the gain from the day one itself during the balloting day when it was launched until that it was MOP, some of the gains are as high as 100% to 108%. So I'm one classic example. And what I did is that back then when I was selling a lot of EC, of course I sell the condo new launches as well. It depends on the buyer profile. Because some buyers are not eligible to buy EC. So I will recommend to buy new launches of better potential. So I promised my buyer and I promised myself that upon my MOP, that is in 2022, because my EC actually attained its MOP in 2022. So I promised myself, as what I shared with all the buyers back then, over the last 8 years that I'll do decoupling. I really did decoupling 2 years back, and I free up my wife's name. So she bought another EC within the same development in a Sengkang EC project called The Vales. So in fact, I own 2 units. It's 3-bedroom as well. So my friends who actually say, "Aiya, Dragon Sada, how come you put all eggs in one basket?"
Yeah, because same.
Correct. This Sada, you should diversify your investment elsewhere. But back then, I did share with all my neighbors as well. They asked me why. Typically, it's more like, number one, I love the location of Vales. I love the environment in Sengkang itself because my kid is studying P1 in Sengkang itself. So I foresee that I'll be staying there until my kids really grow up and probably he study elsewhere. So number 2 is basically for pure business purpose, because I buy one more unit in Vales, it enhanced my conviction, or it formed my conviction to do my best for my neighbors when they engage me to sell their house.
Right.
Because my stake is double. So for every $10 PSF that probably the appreciate, right, my net worth will go up by 20,000. If the prices or the valuation go up by $10 PSF lower, my net worth will go down by 20,000. So that's my mentality. No matter what, I need to do a good job for my neighbor.
Yeah, you have skin in the game.
Correct.
That's what they call it.
So by increase my stake. So typically, my second unit that I bought during the 2022 was under my wife's name upon the MOP itself. We did decoupling. So in fact, one interesting thing is that I did not view the unit because back then in 2022, it was really a bull market. How do I know bull market? I've been through 2 bull market during my career itself. One is after the Lehman Brothers crash in 2009.
Okay.
Around 6 to 10 months later, my phone started to explode. So, and interestingly, it starts to explode at least with 30 to 50 calls a day. And it goes on for 1 to 2 months. So when this kind of thing really happened, and I really witnessed such a phenomenon, the prices actually so-called escalate up by 30 to 40% back then after the Lehman Brothers crash. So I experienced that again in 2022. And because of the experience that I had in the past, I know already the property market is going to shoot up. So in fact, I did not view the units because number one, it was my wife's deal. So I don't want to sabotage her deal, and a lot of people within the project know me. So I have this concern. If the person know that I'm involved in the deal, and if I'm not involved, like it's my wife, they may not want to sell to me, or they want to sell higher. So it's basically based on my own emotional thinking, or my own thoughts. And interestingly is that she purchased at 1.15 mil back in 2022. We bought in May. By the time we complete in October, 5 months later, the market value was around 1.3 to 1.35. So as of today, it's 1.55. So it's a good 400k.
So just put out a disclaimer, past performance does not guarantee future results though. But what is your forecast or maybe your prediction of the overall Singapore property market right now? Is it like really overheated, or are we seeing a turning point soon? Because it's like a lot of people say going to a property bubble.
The property bubble I've heard since 2 years ago, 3 years ago, people are telling me that Singapore property prices getting off hand. In fact, back then during the COVID, right, there's a lot of fear. So-called two sides of a coin. One group of people saying that, well, because COVID is coming, property is going to crash. But it did not apply to Singapore. In fact, Singapore did relatively well because I think that we have a very good, stable government who managed the whole COVID well. The branding of Singapore actually went up to the next level. The investor, the foreigner are very, very confident in Singapore. So that's explain why the prices goes up. And it's also because back then there was a low interest environment and US is printing a lot of money. So every time you hear US start to print money, inflation is coming, just buy property. Trust me, because everything is pegged to USD, it will just affect the whole world. And then interestingly is when the interest rate go up, we're expecting the property price to dip. However, it did not apply in Singapore. Probably in some country, yes, the prices start to dip. But in Singapore, the confidence is so strong that the prices still continue to go up. So if you ask me, when will the property prices so-called it will correct or crash? It depends on few fundamentals. The overall local economy of Singapore, that's very important. Because I think that the last year report came out that top 10% household income is 31,000 and above. Monthly household income, not yearly, monthly, is 31,000 and above, meaning that there are people who earn 40, 50k within the household itself. And the top 20% is 22k and above, based on the stats, I think, in 2022 to 2023. So typically, if the household income, the money household income continue to increase, there's no reason for property price to correct. Rather or not, if let's say the household income continue to increase further, I guess that everything is correlated. The prices will still continue to go up, but of course, in a gradual manner. You won't be like the COVID back then, where there's a mass printing of money, so crazy. But of course, we're talking about long term, and then we're talking about 2030, where you still remember the government talked about the white paper back then, when there's a big hoo-ha. 2030 is coming, 6 years time. There's one thing about our government, when they say something, they will materialize it. Okay, don't get me wrong, I'm not a government supporter or whatever. It's just that this is what I noticed. We really have a very good government, stable government, who really promise and deliver what they promise. So I guess that population 6.5, 6.7 million white paper is going to be materialized. And when there's a population is increasing at a rate that in a small country like Singapore, the property prices should be very stable. But government understand that government don't want the price to go ridiculously uncontrolled. Right. They're increasing supply as well because they're preparing for the future. So for the younger Singaporean, don't worry, you still have a BTO. If let's say finances don't match, but if you have the budget, you should really consider, I would say, first property, probably with you and your fiancé or your future spouse, go for EC first. And then you can adopt my strategy.
Which brings me to this question. Are there really people who are not suitable to buy ECs? People who should not go for it?
Okay, people who don't go for it is very simple. It's because to wait for the EC, right, to finish its construction, because it's a BUC, building under construction, it takes around 2 to 3 years these days. So it's around 2 to 3 years to TOP, another 5 years to MOP. So total is around 7 to 8 years.
Right.
So for people who want to be on the fast track, they want to own 2 private property within the next 5 years, probably they should go for condo straight. Yeah, you shouldn't go for EC, neither should you go for BTO. But it depends. It depends on how young are you. If right now you are 22, 23, planning to get married, which I think government has a lot of schemes the last few months to help the NS boys to start the minimal down payment, then you should go for BTO first. But because the runway is probably until 50 to 55, you should consider seriously how you should plan your runway from right now, regardless of what age you are right now, 20s or 30s, all the way to 55. How many properties that you want to own? But of course, these days, because of ABSD, end up you will have husband owning one property, the wife owning the other property. The next one you want to go is either you go overseas, but make sure that you know where you are heading to, because overseas, 人生地不熟.
Correct.
Unfamiliar. Yep, there's a lot of, and you don't know how is the system like. okay, in terms of a foreign ownership policy. And then if not, you go for industrial or commercial in Singapore.
Okay, so that brings me to this question. We talked so many good things and bad things about EC, but how does it compare to maybe condominiums, private condominiums, in terms of either new launch or resale? Because some people are considering the condominium market already, but then they look at EC like a bit better, a bit worse. Maybe you can share with us what are the considerations that people should look out for when they are deciding between condos versus EC?
Let's talk about condo new launch first. Why people go for condo new launch is because maybe they are single. Of course, they are not eligible for BTO.
Yes.
Least to say about EC, you need to be of proper family nucleus. So for professional single, and we have a lot of professional single who are having good income, earning 10 plus K a month, then these are the group of people who are looking at condo new launches. Now, the good thing about condo new launches is that you buy today during the launch day, and then 3 years upon the TOP, you can either move in, rent out, or probably you just flip, you just sell for a profit margin. It's an exit game for you, and then you look for another new launch with a good growth. Or probably by then you should find yourself a spouse, and then maybe the spouse is also of certain income, and then she can also buy her own private property as well. This category of buyer who probably looking at it. So another group of buyer who probably are more into private condo are because their income is probably in their top 10 or the top 20% household income, which they're not eligible for EC, 16 to 17K. Then they should really seriously look into those condominium that is a new launch, 3-bedroom to 4-bedroom, or probably a resale. Now, why they go for resale is because they have immediate needs. So the question is that when you buy a resale condo, you don't have the first mover advantage, because for often or not, the first mover are the first owner.
Correct.
And then probably they are sitting on a good profit margin, 50 to 60%. So it's just that you want something that is immediate. So you just move in to set up your own family or for your children because their school is just nearby. But typically for the exit plan is that probably you don't see much profit margin. Because for often or not, it just apply to BTO owner. The first owner, likelihood they're going to sit on a good profit margin when they exit.
I guess it applies to HDB as well, because the first owner definitely reaped the biggest gains, but
Yes.
the sacrifice is they waited for many years
Correct.
for it to build plus the MOP. And so that brings me to maybe the final question. What are some prospective EC launches that people can look at?
Okay, the supply of the EC right now in the market is very limited. Unlike 2015 when I bought my EC, while we have a bundle of EC supply, to what we see that the pricing is look very attractive as compared now, but yet the market is still moving very slowly. Right now we're at another level. The supply is not a lot, but of course upcoming there are 2 good launches that I feel. One is at the Tampines. Now, Tampines EC is by this developer called Simlian. Simlian layout is always very regular, very functional. It's going to right opposite the new Tampines North MRT, where there's going to be a mixed integrated shopping mall itself, which I foresee that there'll be a very strong responses, which on hand I have a few groups inquiring already. Another is in the west, in a new town called the Tengah. This developer is by Hoi Hub, and likelihood right is going to launch in October this year when the foundation is complete. So these are the 2 good EC launches. Probably that's the last 2 launches of EC for 2024 itself. One is in Tampines, one is in Tengah New Town.
Alright, so thank you, Dragon, for your sharing. I think we really learned quite a lot from all these EC discussions, especially on the loan eligibility, how to maximize it, as well as the considerations whether you should go for resale condo, new launch condo, or even EC. I think it's more of educational content now. And also I want to make it clear that this episode is not sponsored at all. Yeah, because for Dragon wise, he's already a very seasoned property person. So I'm very glad to invite him to really educate us. So if you really want to reach out to Dragon and his team on property queries, right, I do have a Google form link here where you can fill it up, and then you can contact Dragon, see where your property journey goes to. I'm sure his team will be very professional to help you with all that. So maybe what kind of value-added services can you provide to our audience?
I think even simple words, I do my best, we do our best. The happy thing is that when we see our client actually so-called walk through the whole asset progression journey with me, and then eventually they did decoupling, or they sell their EC, sell their condo, they progress to a different level. So this is something that I want to see to all my clients. I always tell my client, I'm looking forward to serve your children and grandchildren as well. So long I stay relevant in the market, and so long my body enable me continue to work for the next 30 years, I will do it. Yeah. And this is the satisfaction that I derived over the last probably 10 plus years as a full-time.
Yeah, so hope you enjoyed this session. Very good to welcome Dragon. Thanks for coming to my show.
Thank you, bro.
Alright, see you on the next one.
See you.